Welcome, host Mark Hairston. And for those who haven't heard us before, Mortgage Talk is always about trying to give you some good information about home loans, about the market in general in the Central Texas area, and how you can make best decisions. And today, I'm really excited to talk about one of my favorite subjects in the mortgage space, and that's around VA loans. These loans are for veterans, and I thought with the 4th of July just behind us last week, it'd be appropriate to honor those men and women who have served in our country. And one of the benefits they have a lot of benefits after they leave the service or even during the service. But one of them is to be able to buy a property using a VA loan. Now, the VA loan is nothing new. It was actually established in 1944 under Roosevelt to help the servicemen coming back from World War II to buy properties with zero down. Now, that fundamental has not changed. So we're going to talk about a lot of the benefits of VA loans. We're going to talk about some of the myths of VA financing and just kind of give an overcap of that. So hopefully stay tuned and learn a little bit about what this loan is about. So like I mentioned, this loan has been around since 1944. I've been in the mortgage space since 1985 here in Austin and helped hundreds of veterans buy properties using their VA benefits. And it's been a loan type that never has been not the appropriate one for a veteran. In other words, there's lots of different types of ways of financing property, but if you're a qualified veteran that can get a VA loan, it's always going to be the best one for you. And I'm going to tell you those reasons why. So the first thing I want to kind of talk about today is around eligibility. Who is eligible for a VA loan? And the way it works is in wartime, if you've been in the service just 90 days, you would qualify. Okay. It's not 2 years. It's not 4 years. It's just 90 days in a wartime period. You would qualify for your VA benefits as a home mortgage. In peacetime requirements, it's only 6 months. So again, it's one of these things that's it doesn't take long if you're in the service to be able to qualify for. And also reservists and National Guard can qualify, but they do have to be in the reserves for 6 years before they would fully qualify for VA financing. And finally, surviving spouses. So if somebody's killed in a war in wartime or dies of service-related disabilities, their surviving spouse would qualify just like they would for the VA benefits. So that's kind of the overview of who would be eligible. If you have any questions around that, let me know. But VA loans are what they call guaranteed by the government. So that's why lenders like to make them, because they know that in the rare case of foreclosure that they're going to get their money back. So the government, because of the veteran GI Bill, if you will, the government guarantees the lenders. So they love making these loans. Plus, they're very, very safe loans for lenders. On average, VA loans go into foreclosure much less than conventional financing or USDA or jumbo or FHA. So lenders like to have these on their books because they know they're going to stay current. So that's one of the reasons we do a lot of VA loans. And also the fact that Texas has, I don't quote for sure on this, but I think Texas is number 2 behind California in the number of veterans here. So there's lots of bases here. There's a big one up in Catlin. There's several down in San Antonio and other places around Texas. So there's a lot of active duty veterans, plus a lot of retired veterans. So I want to kind of spend the next few minutes talking about an overview of what a VA loan is or some of the benefits to it. We mentioned up front the zero down. No, in other words, if you buy a property for $500,000 or even more for that matter, I'm going to talk about some examples around that. You don't have to put any money down if you're a qualified veteran. Okay. No other loan. I can't qualify for that because I'm not a veteran. So when I buy properties, I have to put down at least 5%, if not more. So that's a huge one. And that usually is the main thing that keeps people from buying properties as first-time buyers. Typically, they don't have a down payment. Veterans don't have to worry about that. And the other thing about it is these days they've changed the rules. So they'll go up to $2 million. $2 million with zero down. I had a doctor reach out to me a few months ago. He is retired from the Navy, and he's been a surgeon for a while. He was moving to Austin to take a job here. And made all sorts of good money. And he wanted to buy a property for about $1.6 million up in the Leander area. And he went to his bank first, and they said, well, you're going to have to put down 20%, which he had the money, but he was referred to me. I said, no, sir, No, sir. You can buy this using your VA benefits with zero down and no mortgage insurance. It blew him away. He knew he had VA benefits, but he didn't know exactly what it looked like. Plus, the interest rate was a lot better than the bank was going to offer. So um, that's fairly new. The fact that you can go down to $2 million without any down payment. And the kicker to that, obviously, the kicker to that, number two, is there's no mortgage insurance. Mortgage insurance by nature is a fee that lenders charge borrowers who are putting down less than 20% on conventional financing. All other type of loans have some sort of monthly mortgage insurance that protects the bank against foreclosure. They're insured. With VA, like we talked about, they're guaranteed by the government, so they don't charge an extra fee monthly to guarantee or insure those loans. And the way it works is that you're for a first-time buyer, they do have what they call a funding fee. A funding fee is a charge that you can add to the loan amount, and it goes to the VA. So it is a sort of an insurance premium. And as a first-time buyer, it's 2.15% of the loan amount. So if let's say you're borrowing $400,000, that would be around $8,600 that you could add to your loan amount to finance that. And that is somewhat of an insurance premium. Subsequent use, though, if you use your VA twice, and we'll talk about how many times you can use your VA benefits, you're going to be looking at a premium of 3.3%. So on that same $400,000 purchase, it's around $13,000 that they're going to add to your loan amount in order to finance that property. Again, zero down. That $13,000 does not have to be paid in cash. It can be financed or paid by the seller. It can be negotiated for the seller to pay that as well. Now, if you put down at least 5%, that fee goes down to 1.5%. So that'd be around $6,000. Now, the funding fee can be waived if you have at least 10% disability by the VA, which a lot of people do. So most of our veterans have at least 10% disability. They don't pay any funding fee, zero. And in Texas, this is a very rare stat that in Texas, if you have 100% disability, you pay no property taxes. We all know that property taxes are getting very expensive. So I've done several loans for veterans over the years with 100% disability, and they will pay no property taxes in any county in Texas. That's a Texas rule. That's not a VA rule guideline. So most states that doesn't apply, but in Texas it does. That could save somebody $10,000 or $12,000 a year. Also, it's an easier loan to qualify for. Most people think that a VA loan is hard to qualify for, and that's simply not true. Matter of fact, it's the most lenient loan to qualify for if, in fact, you're a qualified veteran. The debt to income is much more liberal on VA loans than it is conventional financing or even FHA. So debt to income is defined as we take your gross income and multiply it by a certain percent, and that has to cover all of your debt, including your mortgage. VA will allow you a higher debt to income ratio than will be FHA or conventional. So that's another big benefit to people who are trying to qualify in this market for a home loan. And one of the bigger factors, another factor, is loans. These loans can be assumed. So let's assume that you bought a property 2 years ago, 3 years ago, at 3% interest rate, and you used your VA benefit. Now rates are close to 6.5% to 7%. So let's say you want to sell your home, as opposed to having the new buyer go out and qualify for a new mortgage at 7%, they can actually take over your current mortgage and assume your mortgage at 3%. So it's going to make your house much more valuable. People are going to pay a premium for your property over the neighbor's property for sale because your loan can be picked up at that 3% rate. That's again, it's hundreds of dollars a month, most likely, that they're going to save, and they're going to pay you a premium. Now, you will lose your eligibility. Like I could assume a VA loan even though I'm not a veteran. If that's the case, your eligibility stays with the property. If you sell it to another veteran, then your eligibility, you take it with you, and their eligibility is replaced on that property. So that's something to think about if you have a VA loan currently and you want to sell your property. And also, VA loans are only for all owner-occupied. They don't do investment loans. So that's one of the downsides. So if you're going to get a VA loan, they're going to require that you live in that property within 60 days of closing. So that's obviously tough for people who are active duty. If they don't have family moving in, they can't get a VA loan until they move into this area. Um, and we talked about this a minute ago, but lower rates are a huge part of this conversation because, like I said, lenders love to make these loans, and they're going to offer a lower rate typically for veterans than conventional financing, usually by a quarter to 0.5% rate. So yesterday I quoted one at 6.5 on a VA loan. That same client, he'd come to me for 5% down, would be 7%. So that's a huge benefit as well because VA loans always, not always, but typically always have a lower rate. And finally, the seller, when we talk about zero down, I want to be very clear. There are closing costs. So it's not zero buy-in. You have to pay closing costs to the lender and prepaid expenses for taxes and insurance. So it's not zero in, except for the fact that most VA loans are negotiated to where the sellers can pay up to 4% of their closing costs and what they call prepaids. So a lot of our veterans get in for less than $1,000. They may pay for the appraisal and some inspection fees and things like that, but a lot of times they'll get in for very, very little money. So that's another big benefit of VA loans. And then finally, they're very lenient on credit. You know, most loans these days require much higher credit than VA. They'll let you go down to 580 on what they call the FICO score, which is unprecedented. You can't get a conventional loan at 580. You can with FHA, but again, FHA is going to require 3.5% down in higher rates. So the VA loan is much more lenient toward credit scoring, debt to income factors, things like that. Also, if you've had a Chapter 7 bankruptcy, it's only a 2-year wait as opposed to a 4-year wait to get a loan after a bankruptcy. So it's again, it's much more lenient toward that. I want to speak a little bit to another type of loan here in Texas. Texas years ago, and I mean years ago, since the 80s, I've been doing this type of loan. It's called the Texas Veterans Land Board, and it's actually a Texas agency that provides special loan types for qualified Texas veterans. Most states don't have this, but Texas does. It's actually a bond program that's initiated by the state of Texas to raise money for benefits for veterans, and one of them is in the housing market. Now, the land board sets their own rates. In other words, they don't. There's a market rate for VA. Yesterday was 6.5%. The land board, I haven't checked today, but sometimes they have a much lower rate than the VA. So if you're a qualified veteran, you can still do the zero down. If you go through the land board, the Texas land board, you may get 6% or 6.25%. So that's something we always look at. And they also have land loans, lot loans for veterans, and other sorts of benefits. So the Texas Veterans Land Board is something you certainly want to know if you're a Texas vet. Just want to throw that out there because that's available for again, all Texas veterans. And so I want to talk a little bit about some of the myths of VA loans, because there's lots of confusion so much, but just misunderstanding about how things work in the real world. And some of the myths I put down here on 6 different types of myths. We talked about this a minute ago, but other types of loans, one of the myths is other types of loans are easier to qualify for. And that's really not true either. Credit scores are higher for conventional financing, down payment requirements, debt to income ratios are going to be tighter. So again, the VA loan is a much simpler loan for veterans to qualify for than any other type of loan out there. You couple that with the better rates, and you've got a winning combination with zero down and no monthly mortgage insurance. The other myth that I even hear from a lot of real estate people and sellers, particularly sellers who don't really understand that a veteran loan or VA loan, it doesn't take any longer to process or to close than a traditional conventional loan. A lot of sellers are nervous because in the old days, the sellers had to pay a portion of the veterans closing costs. That was mandated by contract, that the sellers had to pay. It's like $2,000 for a veteran versus a conventional buyer, FHA buyer. That was all changed several years ago, but people just don't know that. So I have to educate folks that, yeah, if you accept a contract from a veteran, all the closing costs are negotiable. You can help pay for them, but you don't have to. Plus, we can usually close within about 3 weeks. So it doesn't take any longer to process, doesn't take any longer to get appraisals back or anything like that. So in the old days, it would take 30 to 45 days. These are true statements, 20 years ago, but not today. Um, and again, that was going back to the seller has to pay all the closing costs. And, they used to have to pay the termite fee and some processing fee and lender fees and all sorts of things, but not anymore. Another myth that I hear all the time is that you can only use your VA loan one time. And that's simply not true. I have a client who I've done 3 VA loans for over the years. He's bought property, sold it, bought another property, sold it, all with 0 down. And it just makes a great strategy for veterans. But again, there's no rule that says you can only have one VA loan. Now, getting back to the funding fee, we did talk about the funding fee being increased the second or third or fourth time that you use it. So that is sort of the downside of subsequent use. But again, if you're saving thousands of dollars up front on your down payment, most people don't care. And the other myth around VA appraisals are a little bit different because conventional appraisals and FHA appraisals, we order directly through the lender that we're taking the loan through. VA is different. You have to order it through the VA. And they are the ones who assign the appraiser to that particular property. And it's on a rotating basis. So we don't have any idea who the appraiser is going to be. But in the old days, we didn't even know for a while who it was going to be during the process, and they could take as long as they wanted to. But they changed the rules around that to where veterans, VA appraisers have to have the report back to us within 10 business days. So we usually get those ordered right away, and they don't take much any longer than an FHA appraisal or conventional appraisers. And people are concerned that VA is very conservative on value for veterans. Now they are looking out for the veteran. And the best thing about that is, let's say you buy a property for $500,000 and the appraisal comes back at $450,000. A veteran by contract can get out of that contract without losing any money. If you have a conventional appraisal and it comes in low, you have potentially could lose your earnest money or not be able to renegotiate the deal. So the VA does give veterans an out when it comes to low appraisals, which is a very, very positive thing. And they do require a termite inspection. That's one thing that other types of appraisals don't, which isn't a big deal generally, but they do want to make sure the property doesn't have termites, and that is a requirement for the appraisal. And then finally, another big myth is you could only have one VA loan at a time. And I told this story a few weeks ago on this on the station that a young man, well, he wasn't that young, he was in his 30s, but he owned a property using his VA benefits about 5 years ago. And he wanted to move out to the Manor area, and he wanted to use his VA again. His bank told him he couldn't do that. He went to 2 other lenders. And he finally ended up with me, and I said, no, so George, you can use your VA again. We did the research on his situation, and we concluded that because of his eligibility, he still had enough eligibility to buy a property for around $350,000 and keep his current home. And he was shocked and pleased because he wanted to keep that property as a rental property because the rate was so good and he could cash flow it. So he had a property in Pflugerville, which he had bought about 3 or 4 years ago at a good rate, probably around 3.5 or 4%. And he wanted to keep that long term for an investment. His bank and the other lender told him he had to put down 5% on the new house. And so I said, no, sir, you can't borrow 500,000, but you can certainly borrow up to 350, which is what he did. So he bought a property using his VA eligibility. He has now 2 VA loans, one that he rents out. We just closed back in May. He's got a tenant in there. He's moved to the new property at a favorable rate as well, and 0 down. And so the seller paid all his closing costs. So he bought that second property, which he's living in, for no money out of pocket. Well, very little. I think it cost him about $1,500 between some of the closing costs and the appraisals and that sort of thing. So those are some of the bigger myths when it comes to VA. And I'm just trying to make sure that you guys understand that there's all sorts of benefits to using your VA loan. And so I wanted to talk a little bit more about working with realtors on this, because a lot of realtors aren't trained very well when it comes to financing, and that's not their specialty. Their specialty is to find the house. But you want to work with a good lender who's done. I've done, I don't know, at least 150 VA loans over the years. I haven't counted them, but after 37 years, we've been our share of them. And so if you want to reach out to me directly with any questions that we're talking about today, please do so. It's Mark Hairston, and my number directly is 512-789-6967. 512-789-6967, or my email is mark@markhairston.com. It's spelled Hairston. I office right here in Austin, over in the Clarksville area of town, Central Austin, Infield, and Mopac. And I'm a mortgage broker, which means that if I work with lots of lenders around the country. Now, some of my lenders actually have a limit on VA up to $1 million, like that bank did when that doctor went to his bank. But we can go to 2 million on certain of our lenders, and it's very rare that you're going to find somebody who buys a property zero down to 2 million. But it is an option. So let me know if I can have any questions around that. So, kind of in summary, I want to kind of get this thing wrapped up today, but I want to share some final thoughts around VA. So, again, VA loans can be closed very quickly. The last one I did was in around 16 or 17 days. And that's a huge benefit. If you're negotiating with a seller to buy their property, what they want to make sure that you're not going to drag this thing out for 6 weeks. And I usually call the listing agent and I'll say, hey, this guy is very qualified. We can get this thing wrapped up in 3 weeks for sure. So again, they don't take any longer, and I just want to make sure everybody understood that part. The seller can pay, doesn't have to, but it can pay up to 4% of the closing costs, and they may use that money to buy down the rate or pay for the appraisals and some of the lender costs or attorney fees or prepaids or whatnot. Again, it's all negotiable. The sellers do not have to pay those fees anymore like they used to, and I let them know that too, because a lot of them think they still do. And the appraisal again has to be done by a qualified or approved, I should say, approved VA appraiser. The VA has their own staff of appraisers, and again, they're trained in their methodology and their philosophy of property appraisals and conditions. Now, one thing about VA, I will say this: they're kind of a stickler for roofs. They want to see a quality roof and slabs. If the slab looks like it's going to be damaged, they're going to order an engineer's report on the slab. So they're a little stricter on those two areas, particularly slabs and roofs, because Austin area, Central Texas, is known for hailstorms, and so one of the things that they're going to look at closely is the roof condition, especially the age. If it's over 20 years, they're kind of most likely going to want it replaced. If a VA has a lender required repair, let's say it's a new roof or a siding or the flooring or anything that the VA requires to be repaired, it has to be done prior to closing. And typically the seller would have to pay for that. So again, if the VA appraiser goes out there and he says, hey, we like the value, but this property doesn't quite meet standards of VA, they're going to require those repairs to be done prior to closing the loan. Whereas some other types of loans, like conventional, you could actually escrow that money after closing and have it paid. So that's, again, pretty strict rules around that. We talked about this a little bit about termite reports. Termites, if there's any evidence of termites, that would have to be corrected as well. And that's not a very expensive inspection, but it's probably a couple $100 that has to be paid. The other part of VA, as far as qualifying, is you cannot have a non-occupant co-borrower. So a lot of our loan types, conventional and FHA for sure, a lot of times the parents will step in and co-sign for a first-time buyer, a child or son or daughter who wants to buy a property. And then let's say they live in Dallas or Houston or Florida, wherever they live. On those type of loans, a parent can co-sign a loan and not live in the property. VA does not allow that. So you can't call your Uncle Bill and say, hey, I want to buy this house using my VA, and he lives in Dallas. That won't work. So that is one of the downsides, if you will, of VA. But there's so limited downsides, it's not funny. The other is the borrowers must occupy the property. Again, they do not do investment type loans. Now, again, we talked about where you can leave a property and potentially have another one and rent it out. They will allow you to buy single family, duplex, or fourplex and live there and rent out the other side. So it's sort of a quasi owner occupied or investment property at the same time. And that's a very popular strategy for people because they have income to support their mortgage payment. And so you could buy up to a fourplex, live in one unit, and rent out the other three, and sometimes even, pay for most of your mortgage or all of your mortgage. And sometimes VA is confused with a first-time buyer program. That's simply not the case. We do a lot of loans for people who've owned properties before using their VA. And the other myth is you can't own any other properties besides your home. And again, you can have as many properties you want as long as you live there. The VA will allow you to buy a new property with zero down, great rates, no more monthly mortgage insurance. And again, if you have 10% or more disability, no funding fee. So that's, in summary, kind of what a VA loan's about. If you have any questions around that, I'd love to entertain any questions from you. Again, it's Mark Hairston. My number is 512-789-6967. And I look forward to speaking with you and talking with you next week. Bye-bye.